strategies upon strategies upon strategies. Everywhere I look, I go on my YouTube page and there's nothing but gurus and influencers telling me how I can make a gajillion dollars using their strategy trading the market. So come along with me, because in this video, I'm testing out one from Joovier Gems that is supposed to be the end all simple strategy. It doesn't get any easier than this to be able to quit your 9-to-5 and start buying yourself a Lamborghini and baby type. But let's jump in. Here we are in FX Replay, where we do back testing to find out if these strategies actually work or not. And so I went on Joovier Gems videos. He's got a few of them that talk about this hiking strategy, and I took a screenshot of his rules. I'm gonna go ahead and put them up as I read them over. So essentially, I took the rules from this video right here, the one trading strategy that works every day, stupid, simple, and proven. And he's got his checklist up right here. Here's a screenshot of the rules, just so we are all on the same page about them. The very first thing he says is that we need to be on the hike and ice sheet charts. So how do we do that? We're gonna go over here to where we see the candles, and we're gonna scroll down to where it says hike and ice sheet. I've already saved it. I have it as a button up here. So let's go ahead and click it. Notice in the hike and ice sheet candles, it goes by trend, I guess, right? So if they're all in a downtrend, they're red. If they're all in an uptrend, they're green. Apparently with these hike and ice sheet candles, it averages and smooths out so that you don't see as much clutter or garbage or confusion. So it averages, each candle averages 4 candles. All right, Google says hike and ice sheet is the charting technique used to technically analyze used in technical analysis that utilizes a modified candlestick chart to represent price movements. It's designed to smooth out price action, make it easier to identify trends and potential trading signals. In it, hike and ice sheet, check, check. 100 EMA on chart. Go ahead and put that on here. Check. Rule number 3, market structure. Only take buys if price is above the 100 EMA. Only take sells if price is below the 100 EMA. Must form market structure. Higher low above EMA for buys, lower high below sells. Clean pullback, at least 2 clean opposite color candles. 5, enter on a high volume doji as soon as the candle closes. Entry candle must be a doji. High volume means larger or the same size as the last 3 candles. Preferable if the doji is in the direction of your trade. Preferable, but it doesn't mean it has to be. It just needs to be a doji. Got it. For a buy, place the stop loss below the doji. And number 6, take profit. Risk to reward ratio during entry box at wick of entry candle, regardless if you get a better entry. You can go higher, 1 to 2, but win rate will drop. All right, so here we are. We're currently on Wednesday the 2nd. We look over here, Wednesday, April 2nd, there's news. So we're just gonna do the smart thing, and we are not gonna trade on Wednesday, April 2nd. Thursday, April 3rd, also news after the open. We're skipping that, and we're skipping the 4th. So we're into the following week. It is now Monday, April 7th. We are currently below the 100 moving average. Now market open at 9:30, so we're looking for a lower high. Cool. So this is part of our pullback here. There was not 2 or more candles that were green. Keep on going. It's like market's taking off. That's only 1 green candle. 1, 2 green candles, 3 green candles, 4. So all we're waiting for now is a doji. We have now crossed the 100 EMA. Matter of fact, looking at this 100 EMA, it looks like it's just going from left to right. It doesn't really look like it's trending at all. We're only gonna go until 11 o'clock. At 11 a.m. we stop trading. So we are now above the 100 EMA. So in this case, we're looking for a pullback. We're looking for at least 2 red candles and a doji. Okay, let's go ahead and take this 1 to 1 at the close of this doji. I'm gonna place and I'm gonna save this, only risking 1% of the account, and that's a W. Let's do the entire month of April and let's see how this would turn out. Next day, no news on April 8th. We are above the 100 EMA. Go. And then we're looking for a strong doji. Now this has a big wick, but I would consider it a doji. I'm gonna go place the trade. We're still in the first 3 minutes of the market open. I wouldn't go ahead and do it. Typically don't take trades in the first 3 minutes of the market open, but let's see how it turns out. Oh, I hit the wrong button. Let's see how it would have been a loss here. Top of the doji into 1. Well, we didn't take the trade, so we're not gonna count it. April 9th, there's news at 2. We're gonna go ahead and skip that day. on April 10th. Let's go. Market opens. We're currently below the 100 EMA, making a lower high with more than 2 candles of pullback. We're waiting for a doji. There's the doji right there. We're gonna go ahead and place our trade. That's roughly the size of the doji right there for a 1-to-1. Go. Now notice when I place the market order, and this is what I kept running into. I place a market order, and because doji is an average of the past few minutes, look where my market order came in, at the bottom of the doji. So this really isn't a 1-to-1. Look, my stop loss is just this little area, and my take profit is this big area. However, in that case, we look at the closed positions, I ended up getting a 3-to-1 on that. Worked out in my favor. Next day, we have news after market open. We're gonna skip Friday the 11th. We're on Monday the 14th. We see that we are currently above the 100 EMA. Waiting for, in the very first minute of market open, is a doji. I'm gonna go ahead and take the trade because that's what the rules say. This at the bottom of the doji. We'll put this at the top for a 1-to-1, risking 1%. Let's see what happens. We took a loss there. Now there's an even stronger doji that just appeared. Do we take more than 1 trade a day? Next day, above 100 EMA. Let's go. Opens, we got our 2 candle pullback that we're looking for. We need a doji now. Okay, we go ahead and put this right below this low point here, 1-to-1, and we take the trade. Now in this case, look where our market order puts us, at the very top. Right now we have a negative risk to reward. We theoretically have a 0.3 risk to reward as opposed to a 1-to-1. We get it. We're on April 16th. We got news. We're gonna skip it. Now we're on April 17th. Market has been going sideways for a while now, a couple hours. Let us begin. We're currently below the 100 EMA, making lower lows. Waiting for a 2 candle pullback. There's 1, there's 2, 3, doji. Let's go. Entering into a trade here, top of the doji, 1-to-1. Once again, our market order puts us with a very small range, but it's a win nonetheless. A W is a W. Go to the next day. Here we are on Monday the 21st. Market is about to open. We are currently above the 100 EMA, making higher highs and waiting for our 2 candle pullback. Okay, we've broken below the 100 EMA. Now we're making lower lows. Here we go. Let's see the doji. Green doji. Now, he preferred for it to be red, but it did not have to be red. Let's go ahead and take this trade right above and right below for a 1-to-1. As you can see here, that ended up going in our favor. Next day, we're above the 100 EMA. We've already started doing higher highs and higher lows. Here we have market open. The 2 candle pullback in the first 2 minutes. However, that's not a doji. Now that is a doji that I feel like I could have taken, but I missed it. Let's keep going. We definitely have trend direction now. 2 candle pullback and a green doji. So we're gonna go ahead and take this. Move this around our 1-to-1. Place the order and we get the W. It's the 23rd. We have news at 9:45 just after market open. You can see down here by the little flag. Let's go ahead and skip today. Now Thursday the 24th. Next day, let's go ahead and put this below the low, above the high for a 1-to-1. Place our order. We are in there like swimwear. Next day, April 25th. There's no news today. We're currently above the 100 EMA. Let's see where this takes us. We got a huge red doji. Once again, this is happening in the first 3 minutes. I'm gonna pull this below this low point and this at a 1-to-1, and we're gonna place a trade. Now, because this was a market order, look where it put us in. And just so you guys can get a better visual of this, because this is a great example. If I go back to regular candles, because it averaged out the last 4 candles, it showed us this. However, it turns out that price is currently right here at the top, right? This has no wick whatsoever. This is a, what is it called? A Maribuju candle? Either which way, there's no wicks on either side. This started here and it was so strong, it ran to the top. I would think this would need more space to run. We're following the rules. Let's go ahead and take the trade. It was a winner. Yeah, this one definitely could have kept going. Next day is April 28th. We're above the 100 EMA. We're currently in pullback zone and we have a huge green wick in the first 1 minute. Let's go ahead and set. This goes at the bottom of the wick and this goes up here to make a 1-to-1 trade. We'll place our order, risking only 1%, and let's see what we took a L that day. The next candle would have been also a doji, even bigger. We would have taken the exact same trade. We're here on the next day, April 29. We are currently below the 100 EMA. We're looking for more then 2 green candles. Here we have a whole series of green candles. Now we're looking for a doji to take the sell. Didn't get it. Here we are again, testing that 100 EMA, and there I do see a doji. Let's go ahead and place our trade here. This goes right above, this goes right below for a 1-to-1, risking only 1%. See what happens. So we lost this one. It ends up breaking above 100 EMA. Currently April 30th. Gonna skip that day. There's news right after the open, and that's it. So let's go check out our dashboard. Let's see our stats and how we recap. We took this style of trading from Joovier Gyms for an entire month, the month of April 2025. In that day, we did not trade any of the news days. If there's big time red folder news days, we totally skip those days. If there's news right there after market open, if it happened before market open, then we would still proceed to trade. That gave us 11 total trading days. Out of those 11 total trading days, we won 8 and we lost 3. That's pretty darn good. That's a little more than 70%. Currently 72% win rate. We started with an account balance of $10,000 and ended up with a total P&L of an extra $456 if we had this fictitious account, right? So our account theoretically has grown 4.5%. Here it shows how we were winning and losing on the day. My average risk to reward was about 1%, just under 1%. Not terrible. This ideal average 17-to-1. I don't know how real that is. Either which way, max consecutive wins, 6 consecutive wins, 2 consecutive losses. And I like to check this out. At the end of April, after taking the 11 trades, we were up 4.5%. So if you are funded with a $100,000 prop trading account, this is an extra $4,500 for the month of April. If you only have a $50K account, that's still $2,250. And looking here at our wins and losses for April, I mean, man, that doesn't look too bad. Anytime I lost about 100. When I won, well, it varied. As you can tell here, a lot of them are small, $12, $35 wins. It's because of that averaging that happens. However, you do get trades like this, that it ended up being a 3-to-1. There's key takeaways from this experiment. For the month of April 2025, honestly, you can't knock it. By no means am I an expert, but I think 72% win rate from what I've seen is pretty dang good. Oh, I don't know. Big takeaway for me though was the fact that if you're placing market orders, which are already not guaranteed price, but guaranteed execution, and you're using the hike and icy candles, you really got to think about how far off you're going to be from your entry price. A lot of the trades, most of the trades that I took were not 1-to-1. They were literally 0.3 and 0.4-to-1 when it comes to your profit target, risk to reward. However, every once in a while, we did get a big one, and therefore it averaged up to about a 1-to-1 over the course of a month. Now, I understand that this was only 11 trades, and to get real numbers, you do need a larger sample size, much larger, hundreds, thousands of trades even. However, for just dipping the toe in the water, it doesn't seem like that bad of a strategy. I'm gonna test it out some more over a larger number, maybe do 100 trades, and I'll get back to you guys and let you know. So if you wanna see more videos like this, or if you guys have a different strategy that you'd like for me to test out, please drop it in the comments below and I'll do my best to check it out. And until the next video, this is your friendly neighborhood coach. Here comes the night.